Welcome to the deep dive. Today we're plunging into something, well, pretty fascinating and maybe a bit unsettling too. We're looking at the growing political pressure on the Federal Reserve, its long-cherished independence, and how all this tension seems to be fueling a comeback for gold as a safe haven. Our guide for this exploration is an analysis from the Gold IRA Company's Bulletin. It's titled Political Pressure on Fed Fuels Gold Safe Haven, published just recently, August 3rd, 2025. And it really shines a light on the economic climate and the anxieties of 2025.
Yeah, and to really get what's at stake, we first need to understand the Fed's basic job, right? Congress set it up with two main goals: keep prices stable and get employment as high as it can sustainably be. Now, to do that without, getting pushed around by politics day to day, it was designed to be insulated. You've got governors with those long 14-year staggered terms. The chair can only be removed for actual cause. The whole structure is meant to keep the focus on long-term economic health, not short-term political wins.
Right, insulating it from the immediate political fray.
Exactly, but here's the thing, and it's important: the Fed isn't in the Constitution. It came from the Federal Reserve Act of 1913, so its independence relies on laws, traditions, norms. Congress can actually change its structure or mandate. And we've seen times, like back in the 70s, where political influence, well, it definitely helped fuel inflation. So these safeguards, they really matter.
Okay, that's a theory, how it should work. But let's unpack this for 2025. What's happening right now that's making this independence feel so contentious? Is it just louder? Or is something fundamentally different?
Oh, it's definitely intensified. I mean, the strain on the Fed in 2025 is pretty remarkable. We've seen President Trump publicly criticizing Fed Chair Jerome Powell quite heavily, specifically for keeping interest rates relatively high. They're around, 4.25% to 4.5%. Trump's been pushing for rates down near 1%, arguing it would boost growth, ease the national debt burden.
1%, wow. That's a big difference.
It is. And he even floated the idea, of maybe replacing Powell before his term is up in 2026. That alone caused quite a stir in the markets, introduced real volatility. And look, it's not just the White House. You have figures in Congress on both sides of the aisle weighing in on rate cuts. So it shows this pressure is broad. It's not just one political viewpoint.
So with all that noise, the president, Congress, how's the Fed actually handling it? Are they bending or holding the line?
Well, what's fascinating here is that despite all that pressure and probably some disagreement internally, too, the FOMC, the Federal Open Market Committee, they've kept interest rates steady for 5 meetings in a row now. Chair Powell has been very public, very clear, emphasizing they're sticking to data-driven policy and they're independent.
Sticking to their guns, so to speak.
Pretty much. But the legitimacy of everything the Fed does really hangs on people believing it's independent. Market participants, investors, they watch like hawks for any sign that politics might be trumping economic data. If that trust erodes, historically, you see big market reactions. The currency might fall, bonds sell off, investor confidence just plummets. Yielding to political pressure, it almost always backfires, leading to inflation spikes and general economic instability down the road.
Right. It undermines their credibility, which is almost everything for a central bank. So connect this for us. What does this tightrope act mean for the bigger U.S. economy right now?
Well, it puts policymakers in an incredibly difficult spot, a real economic conundrum. Think about it. Mid-2025, the U.S. national debt is over $36 trillion. That's a massive number. And at the same time, economic growth has slowed way down, estimated around maybe 1.2% GDP growth.
Oof. High debt, low growth. Not a great combo.
Not at all. So here's the dilemma. Keep interest rates high, like the Fed wants, to fight inflation. That makes servicing that $36 trillion debt way more expensive for the government. But, okay, give in to the pressure, lower rates to make the debt cheaper. You risk unleashing serious inflation, maybe even damaging the dollar's value. It's like, there's no easy answer with the usual tools. This really limits their options and creates a lot of long-term uncertainty.
Okay, so the traditional levers are stuck. And here's where it gets really interesting, as you mentioned. Gold. Why is this ancient asset suddenly looking so attractive now?
Exactly. Gold's had a significant run-up in 2025, hitting record highs. And the deeper insight here isn't just that it's rising, but why. It suggests that even traditional safe havens, like, say, U.S. Treasury bonds, are being viewed with a bit more skepticism. Unlike a lot of financial instruments, that have counterparty risk or are exposed to inflation or sudden policy shifts, physical gold is different. It's a bearer asset. You hold it, you own it. It has intrinsic value. It's seen as this enduring store of wealth.
So less about politics, more about something tangible.
Precisely. It's widely seen as a hedge against, Currency debasement, inflation, systemic risk, all the things people worry about when you see political fights over monetary policy and this huge debt load. In a way, it's like a vote of no confidence in the usual financial management, especially when treasuries themselves face questions because of monetary policy concerns and currency risks. And things like Bitcoin, still too volatile, still less proven as a real crisis hedge for many.
And this isn't just individuals buying gold coins, right? We're seeing bigger players involved globally.
Absolutely. It's a global trend. We're seeing a clear move towards diversification away from the US dollar. Several foreign central banks, sovereign wealth funds, they're actively increasing their gold reserves, quite significantly in some cases. I think this reflects worries about where US monetary policy is heading, but also geopolitical risks. The potential for currencies to be used as weapons through sanctions or trade disputes, this whole trend, sometimes called de-dollarization, this push for reserve diversification, it's picking up steam. And it reinforces gold's role as a strategic national asset, kind of like financial sovereignty insurance.
Okay, so gold's having a moment, driven by these deep concerns. It can't be a perfect solution either, right? Are there downsides or risks people should be aware of?
That's a very fair point. Yes, gold isn't without its own issues. Its price can be volatile, especially in the short term. It gets pushed around by currency fluctuations, interest rate changes, pure market speculation sometimes. And if you're talking physical gold, you have to think about storage, keeping it safe, liquidity, how easily can you sell it if you need cash, and transaction costs. And of course, we should always say this conversation is for informational purposes. It's definitely not financial advice.
Right. Always important.
Anyone thinking about these kinds of assets really needs to do their homework and ideally get professional advice tailored to their own situation.
Okay, so wrapping this up, it feels like the core tension here is the Fed's independence. It's supposed to be a bedrock for economic stability, globally even. But the political pressure it's under now seems to be shaking that foundation.
Exactly. And gold's rising popularity in 2025 isn't just about gold itself. It reflects these much bigger worries about whether governments can pay their debts, whether central banks can maintain currency value, about geopolitical stability. It really underscores gold's historical role as maybe a mirror reflecting systemic risks, more than just a way to speculate. It tells us something is feeling unstable.
So for you listening, what does this all boil down to?
Yeah.
I think it means keeping an eye on these big macroeconomic forces, the politics around the Fed, the global debt situation. It's all crucial for understanding the markets and thinking about your own financial security.
And maybe it leaves you with a question to chew on. We've seen central bank independence ebb and flow throughout history. We see this growing global trend towards diversification away from traditional anchors. So how might our whole understanding of what constitutes a safe haven asset continue to change in this, interconnected and pretty uncertain world we're in? What stands out to weigh from this deep dive?
Lots to think about there. We hope this deep dive gave you some valuable context and maybe some new questions. Thanks for joining us, and keep exploring these important economic ideas.